Wonderful good morning or wonderful good day. Welcome, bienvenue to our international webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side that will be answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Friday, 31st of August, 2018. And we will start like every day with our disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account to make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. For example, also the key information documents, the kits, if you like to study them. On our webpage, you will find also the differences between retail clients and professional clients. Since August 2018, the new European-wide ESMA regulation is in force. Since then, retail clients will have a maximum leverage up to 30, and professional clients, if they apply for that status, can still get a higher leverage up to 500. You need to be eligible for that. All details about that on admiralmarkets.com. Or a picture shows more than 1,000 words. If you trade as a professional client, DAX 30 or euro dollar, your margin is quite low, 24 euro in this example, or 200 euro for a full lot. And as a retail client, you see the margin requirement is a little bit higher. More details about that, like said, on admiralmarkets.com. They will find also the differences about the protection status. Retail clients will have an unlimited protection against negative balances. Professional clients will have an protection up to 50,000 British pounds, what is around about 70,000 euro, during our negative balance protection policy. Also here, check all the details out on admiralmarkets.com, or here's a specific link what is displayed right now. This is me. My name is Jens. My English is made in Germany, so I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And like today, on Friday, it's Dirk's day, our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 or euro dollar typically spread during main trading hours of 0.8 pips or points without additional commission with our account Admiral Markets. Also here, check all details out on admiralmarkets.com. There you will find also our contact details and something about our regulatory background. But it's enough from my side. Now it's time for Dirk. Good morning, good day. What's your view to the markets today, Dirk?
Yes, good morning, Jens. Good morning, guys. I just want to share my screen. Yep. So let's start. As Jens already said, a couple of things happened again and again. The so-called trade war, trade conflict stuff is still going on. So if you just have a look at the headlines or from the last 24 hours, you will see a lot of stuff from Trump. You will see a lot of stuff from the U.S. administration talking about.
And please share your screen. So far, we just seeing the waiting screen.
Oh, I already pressed the button. Not sure what's happening.
Maybe we go back that I show my screen. Now it's running.
Okay, something a little bit not easy to this morning. So okay, we were talking. Well, just throw back just 1 second. Yeah, I talked about this trade conflict stuff and about Trump's latest ideas, and he rejects the European Union offer to eliminate auto tariffs. Of course, this is something like very funny because it is simply not enough. He said, just to quote him, right? It is simply not enough to offer a zero tariffs on both sides. He was talking about adding that European consumers habits, they should buy their US cars. So stop buying your BMWs and your Mercedes and Audi and Volkswagen stuff, and start buying Chevrolet back on plastic. So enjoy. All right, we'll be having a look at the DAX, and as you can see, we took that road to the downside again. So if we look back at the couple of last 1 or 2 weeks when I draw that chart here with that descending trend line, this pink descending trend line here, and the trade box, the blue one, I told you that this market might be scratching that 12,600 marker. As you can see, that one got scratched around the 12,600 marker. If you want to be 100% correct, just let's see what the DAX did with that one. So the last official high on that one was, let's see, 12,597. So almost scratched exactly. Next borders to the downside, as you can see here from the 61.8 retracement is around the 1200 274. So let's round that up to 12,280. That brought me to the attention that I might start a buy limit around that level, as you can see here with the blue line, or as you can see here with the badge buy limit. So the buy limit is a little bit up there. It's 12,298, and as you can see, the stop loss down here is at 101.3 pips. So the risk is 100 euros in that trade. The take profit scenario is slightly around that 12,500 marker. You got a lot of tools. If you can't see those kind of tools here, you may ask Jens and his colleagues in Berlin to maybe to help you implement that stuff into the trade platform, into the MetaTrader trade platform.
We are international broker. You can call us in Germany, or your local support. So 18 country offices. It's called just MetaTrader Supreme. It's available for MT4 and MT5. We call it Boost or Tune, like for cars. Tune your MetaTrader, free for demo and real accounts. Just over 60 additional features like advanced one-click trading and many, many more stuff. What we will show in all our webinars. So if you like to try it out, just visit admiralmarkets.com or your local webpage, and under the platforms you will find something about Supreme and how to download it for demo and real accounts. Thanks.
Great, exactly. Okay, so there is a couple of things, useful tools on top of that, because right in those times, right, we are in here, it feels like a little bit between 2008, 2009, so it could be a bumpy road ahead. First of all, guys, have a look at your calendar. As Jens already said in the intro, it's the 31st of August, so that means it's the last trading day of the week, of course, Friday, like every day for me here at the webinar, but on top of that, of course, it's the end of the month. And the maybe bumpy month of September is ahead. And if you look at a couple of US indices, you might be aware that those indices did not even skyrocket. They almost touched the roof, the ceiling. So it feels like that a little bit of correction is absolutely due, even if you look at those mega overbought territories from relative strength indices in the Nasdaq 100, for example. This will be having an effect on the German DAX as well, and of course the European stock indices, the bigger ones. You're possibly familiar with, like the CAC 40 from Paris, or maybe the FTSE MIB from Milan, or the FTSE 100 from London, or of course the leading index from Europe, the Euro Stoxx 50. So if you look at those tools here, these tools here, you will find a so-called lot size calculation. It makes sense to maybe show you that one, talking about that DAX long setup here, because you should not trade with too much size. And if you're able to just look at the stop loss, for example, here you get the 50% pips, and this one could be expressed to you in maybe in cash. You can of course place a 100 euro risk here. What is going on with that one? Kind of annoying. So, and it shows you the cash risk 100 euros, pip value per lot is 1, and you should trade with 2 lots, for example. If you place that one at the percent of equity, you may, for example, try it with 1%. 1% is a cash risk of 500. Approximately 500, just to round that up. That means 10 lots here. That's a little bit too much in that case. The account right here is around the 50,000 euro marker. Of course, that's a demo account, but in in real, it's the same amount of money. It's the same calculation. So if you see the cash risk 500, well, 1%, it feels like a little bit too much. A lot of traders I know, possibly you know them as well, are trading with a cash risk. Excuse me, with a percentage rule of possibly 0.5. So that means they are risking 250 a trade with an account from that size here, or possibly reducing that a little bit to the downside as well, and trying to do that with 0.25%, for example. So you see that one, the percentage point of equity is 0.25, and the cash risk here is 125, 126 euros. If you remember, I was talking about that DAX setup here today, that is really close to that one. So it is something between the 0.25 or 0.20. If you mark that, it's absolutely exactly a cash risk of 100, and it's not forbidden to do that. It's very easy to do that once a day or a couple of times a day, and 5 or 10 times a day, as long as you are able to cash out some small winners. And always remember, cashing out small winners from time to time makes sense. And after that, at the end of the day, you're possibly just build up a little bit of more wealth. So that makes sense. Okay, these by the SPY limit around the marker of 12,298 here is let's say not by something like the outcome of Merlin's glass ball. It's something like it has to do with Fibonacci retracements. And as you can see down here, there's the 23.6 percentage point of the Fibonacci retracement here, and it's a little bit underneath that. And if you look at the today's low, it's a little bit more room to the downside here as well. Okay. That's for sure one thing about the DAX. And if you, of course, have a look at some Xetra DAX pivot points on top of that, you may use as well the Admiral Markets pivot point indicator. You will find those pivot points in the navigator with Admiral tools and pivot points, and just press the button and will be inserted in your MetaTrader as well. Just going to that Xetra DAX stuff here, the pivot points right here, right up to the pivot point where you see 12,475. So that trade setup I placed here is a little bit of a, let's say, climbing back up and a little bit above the pivot point, which means 12,500 gives a little bit more room to maybe a little bit of an overshoot above that little line here. Support 1 is 12,420 and support 2 is 12,345, which is very close to our current DAX here with 12,368, as you can see that on the right side. Okay, then on top of that, you got the EMAs, EMA 50, EMA 100, EMA 200. All these data stuff is from 11 CT. I just placed that in to the board here while Jens was talking about the introversion here. Okay. Enough from the German DAX and from that kind of a setup. Just have a look at a couple of things next week, going into next week. Be aware that for the Friday, the 1430 CET data is set for the US non-farm payrolls. That one is quite important. If you go back a little bit, go back to the Wednesday, you got the Deutsche Börse, which is about to decide which kind of company has to leave the German DAX and which kind of company possibly comes in or will be welcomed. Right now, from that kind of perspective, it looks like the German second largest bank, Commerzbank, is about to leave the German DAX. And possibly a fintech company, let's call it a fintech company, named Wirecard, is about to enter the DAX. So that, from today's point, is a possible deal that could happen. You never know at 100% or 1000%, as we can say that, but that's right now that is on the cards if you are talking about the DAX, so-called DAX committee, which is about to decide what is going to happen there. Okay, gold. This night I started a gold long scenario, posted that one at guidance with my guidance shortening FX Dirk, as you can see. That maybe if you type that on into Google, you will find that the entry point was at 1,200.0102. Quite close to that directly marker of 1200, and the only reason I did that is it is the end of the month. Gold got really hammered in August, and right now, if you have a look at COT data, if you have a look about that kind of a sentiment, gold is not even hammered. Gold is massively hammered in the last month. The whole 2018 was, yeah, let's say, a so-called bloodbath for bulls, gold bulls, and the COT data shows you that this kind of mega gold short stuff is about to skyrocket at a level never seen before. So that's something like a so-called heads up for you guys to possibly think about that there should be, or that there could be a gigantic short squeeze coming up. I'm not be sure when this kind of stuff starts. You never know that. Of course, it would be too easy if you know that, but it shows you that there is a massive problem, and if those guys being short, heavily short, speaking about hedge funds and participants like that, they need to buy gold back just to get flat, and that's the cause we call the short squeeze. When it goes up, it's mounting and it's skyrocketing. Okay, where could this kind of a trade scenario gets us to the upside? I'm just deleting this indicator and show you that blue box here. We are on the hourly chart, and maybe going to the daily. And as I draw the last blue boxes and so-called Fibonacci retracements, you will see this possibly targets in direction to 1250. The first yeah, let's say interesting levels could be those high levels, old high levels around those 12.340 and around 12.36. So of course I'm talking about 1,234, 1,236, which is a possibly target of that long scenario. Stop loss is at 11.75, so that sounds huge. It's 25 bucks. That sounds huge, but it depends what kind of a size you trade, the level you trade. Always be aware that you're allowed to do a lot out there. You're your own boss, and nobody tells you how to trade and when and how often. So it's your decision what kind of a size you decide to choose, or if you even choose to stay aside and wait what will be happening the rest of the day and just start a trade very, very close to the end session of this today's Friday. All right. Most important index, if you look at that, is I would say is the Nasdaq 100. Of course, there might be some other interesting indices out there, but there's no one tradable so perfectly like the Nasdaq. I'm not talking about trading perfectly in case of perfect setups to find, to sell, and to buy. No, I'm talking about liquidity. I'm talking about cheap trades to get in and to get out all the time. Of course, the Nasdaq has one thing for sure: massive liquidity. And if you look at the, let's just go a little bit to the weekly, possibly even to the weekly, widen that one. If you look where the Nasdaq is coming from and that kind of velocity, the Nasdaq went up 1,000 points. You may scratch your head where all this money and all these guys are coming from, buying that Nasdaq 100 up to the roof. It's not even that international money is coming back to the US, buying massively into US stocks. Something like a safe haven, a play forever, or something like an inflation hedge for whatever reason. Might be all kinds of reasons media is writing about, but one thing for sure, I'm 100% sure that this is something. This has something to do with the so-called buybacks. the so-called share buyback programs of huge Nasdaq companies. And you all know them, the 5 biggest Nasdaq companies, like Amazon.com, like Apple, like Alphabet A and C shares, and like Facebook, and a couple of others. They all stand for almost 45 to 50% of the whole Nasdaq. So even 5 to 6 companies are already 50% of the Nasdaq worth, market capitalization, and so-called index weight. And if all these companies are buying back shares massively, those shares, of course, are going up. Look at Amazon, stretching 2,000 marker. Look at Apple, look at Microsoft, look at a couple of other companies like that. And that means that this is coming slowly into an end session. For example, one of the biggest US investment banks, like Goldman Sachs, are talking about that is these kind of share buybacks of US corporate America is going to hit the mark of possibly $1 trillion. So in 2018. So just imagine what kind of a number $1 trillion is. Have a look at the last, let's say, movements of that one. The last bigger correction right here is from the week. Maybe we go just to a daily chart and get back to that date so that we can do that exactly. And talk about the so-called markers where you start the Fibonacci analysis. You got one high from the 13th of March, and that one is at 7,185.67. Then you got one low at the 4th of April, going down to 6,295.12, and those two markers are combined for a Fibonacci analysis and give you some hints to the upside and give you possible Fibonacci projections to the upside as well. As you can see, 138.2 and 161.8 level. And this is a trade scenario right here, which is right in the middle of it, between those two projections. Possibly, of course, we can easily scratch the roof in 1 or 2 hours. No problem. This Nasdaq is always good for a surprise. Everyone knows that. Everyone trading the Nasdaq 100 in the last 2 weeks, for example, trying to get some kind of new short entries, got a big slap and got hit out and got stopped out and maybe scratched its head. What is going on with that one? And there's no relief, and there's no something like a little bit of correction, nothing. So this correction is, as I told you, massively overdone. And if you look at indicators like relative strength index on a daily basis, you will see that this one here is around 72. And if you look at weekly, we are scratching this one at almost 70. If you look at the monthly, and that's more impressive, look where we are already on a monthly. We are massively overbought, even over 80 marker here from RSI. I always use that 2080 stuff because it's giving a little bit more clear signals for oversold and overbought territories. You can easily change that if you go to your settings for the RSI and look at RSI properties and change that stuff from levels. Just type it in 2080, for example. Quite easy. Okay, delete that one here. Going back into the daily and deleting this older, or let's say longer term Fibonacci retracement setup, and looking for another one. Looking for another one from the last correction, bigger correction, and widening that picture here for you just to possibly to a 4-hour chart. Just let's see if that is maybe a little bit more visible. No, that's the wrong attempt. That's the correct high, and that's the correct low. So the reason why I just placed that try of a short scenario right here is that we are overshooting of this 138.2 level, and those two candles right here looked like a massive sell, a huge volume sell here, and it gave me a little bit of a hint that we could try first a short right here to the downside. Let's see if that works. Possibly you will be finding targets to the old high. The old high I'm talking about is a horizontal line of that older 100% here, which could be a target at 7.520s for some reason, that you get a relief to the downside, so-called correction. Okay. A couple of markets. Jens, is there a special market?
No, but I will already say thanks and goodbye. We have 1 or 2 minutes more, but the time is our limit, 15 to 20 minutes, and we are already speaking 25 minutes, but that's fine. Tomorrow is another day, but tomorrow is weekend, so I wish you already now a great weekend. The next webinar, Real-Time Daily Traders, will be on Monday with Jay Medvo. Jay is focusing more on the institutional view for Forex trading, so if you'd like to see that, please join us on Monday. And if you'd like to see our live webinars again, couple of hours later will be usually available on our YouTube channel. So just visit youtube.com/AdmiralMarketsFX if you'd like to do so. Thanks to Dirk. 1 or 2 minutes more from your side. And yeah, all the time, good trades to all of you.
Yeah, guys, and just one little kind of little, let's say, a story. I always speak about those stop loss levels, sometimes the bigger ones, and sometimes the smaller ones. If you go on a daily chart of the Euro Swiss franc, for example, here, there are a couple of, let's say, ideas from investment banks out there to have a long scenario at Euro Swiss franc, and they are approximately, they are hovering around their entry points right here. So I got a couple of them around 112.95, 112.75, 112.65, advising you to buy a long scenario into the Euro Swiss franc, and now hold your breath. The stop loss is at 109.80s. So you see that's a huge stop loss. They are working with those kind of stop losses because they know that they possibly get out of the market, get stopped out of the market quite quick. Not only for some reason that the Swiss National Bank will do something, but because sometimes this kind of currency bear is like a beast, and maybe gives you a reason to yeah, let's say, protect yourself a little bit of bigger stop loss scenarios, and then later on move it as fast as possible to your entries if that currency pair is turning around, going back to the upside. Quite interesting right now, and that's the only reason I wanted to show you that one, that Euro Swiss franc is again around an area where it might be interesting to get long, back long, but don't do it today. Think about doing that into the next week, just in case of that rest of the month move will possibly hit you in that one. Okay, thanks a lot. Have a great weekend, and I don't know if Jens already told you, but you will find the webinar recording at YouTube, the YouTube channel from Admiral Markets in a couple of hours, I guess. Have a great day, trading day, and of course a relaxing weekend. Thank you. Bye bye.